Welcome back. Let's get chatting about the markets and where the opportunity lies. Sumit Rora from Smart Sun Capital is now with us. Sumit, it's been such a range-bound market in the last 1 year. We haven't seen any return for the large caps. The mid caps, in fact, are down. So in such a market, where is value emerging according to you, and how do you go about thinking about it?
Good morning, Rima, and thank you so much for having me on your show. So, Rima, I'll just give you a little perspective. If you see the total profit which corporate India made in FY25 was about 16.5 lakh crore. Now, of that, if we just digress and we see the profit of PSUs in India has been something like about 5.2 lakh crore for FY25. Now, this is in spite of the fact that, you've had, the oil marketing companies report lower profit because of, the LPG subsidy, which was not compensated, which has now been compensated. So the thing is that the PSUs in India contribute about 31% of PAT. Today, if you see the market cap of public sector in India is about 13 to 14% of the Indian space. So I clearly feel that, in the public sector space, there's a very compelling opportunity and investment theses have been there. And in fact, if you're well aware that, the public sector has had, one of the biggest bull markets in the last few years led by defense and railways. But however, Rima, now I think a space which is, getting pretty attractive, from almost every perspective, is the oil and gas space. And particularly in the oil and gas space, something which clearly stands out is the oil marketing companies. Now, there are so many reasons which I can, highlight to you is that why these basically companies, look good. Firstly, you see the overall backdrop, right? I mean, you have, President Trump, basically pushing for the end of war. You have, OPEC unwinding cuts. So effectively, what you're basically seeing is that crude is now relatively going to settle in a lower range, somewhere between 65 to 75. Now, this is the sweetest spot for these companies because of the fact that, there's going to be, oil is going to be the biggest tailwind for them. As you're aware, the government has paid the LPG subsidy, it's absolutely staggering. It is 9% of the value of HPCL's market cap, 7% of the value of Indian Oil's market cap, and about 6% of BPCL's market cap. So these are big numbers for companies, which today have anyway got asset values sharply, which is basically not anywhere close to, their market cap. I mean, I'll just illustrate a few overall space, and then I'll come back to, one company in particular, which I think looks even more attractive. So, I mean, if you look at it today, Indian Oil has an asset value of 5 lakh crore. Okay. I mean, its market cap is 2 lakh. I mean, a company like Bharat Petroleum has about 2,20,000 crore asset value and its market cap is barely 140. HPCL is well about 2 lakh and its market cap is 85,000. So the thing is that, you've got very sharp, intrinsic companies of India today trading, at a sharp discount to intrinsic value, asset value, in spite of the fact that, the PSU space in India is completely re-rated, right? So the fact is that, I think that maybe its time has come in the sun and, it's probably time where, investors should, have a close look at them because, they actually contribute about 3.3% of profit to corporate India, whereas the OMC's market cap is just 0.9%. So, in every parameter, in terms of ROE profiles, in terms of dividend yields, I mean, the ROEs are about 22, 23%, which is as healthy as, private sector. Your dividend yields are about 4-5%, So I think that this space looks extremely compelling, Dima.
So, Sumit, just wanted to also understand whether you're invested in any of these stocks, and if yes, what are your preferences amongst the three oil marketing companies?
So, absolutely. So Rima, yes, invested for sure. And what basically stands out, in my opinion, is, HPCL followed by IOC. Two reasons. Firstly, if I can just spend, about a couple of minutes talking about HP, it's basically a company, who's, are now entering a payback period. It's finished its capex cycle. It's now basically, commissioning all of its projects. In fact, this is the only company in India which is, doing something called a residue upgradation project. So what does that technically mean? That basically means that, every refinery has a fuel and oil component, which is about 10%. So that will actually now get converted into middle distillates of ATF and diesel. So your distillate yields, will now move up to about 83, 84%. And, that will ensure that, it's on par with peers. It's fully integrated. It doesn't need to buy any products from, other refiners. Integrated margins will pick up sharply. And, that will basically lead to its EBITDA now, being 2 times of CapEx. So I actually foresee that in the next year and a half, maybe latest, its EBITDA itself would be about $4.5 billion, which would be nearly 50% of market cap, So I really think that, these companies, this company stands out in my mind because the payback period is now starting. Its capex is over. Free cash flow generation is going to be extremely high. ROEs are
Okay. I just have one question on this, Sumit, because you're talking about HPCL. It has the highest exposure to the marketing segment as well. Right now, it has worked in terms of LPG under recoveries, but marketing continues to be very volatile for the same reason that the cuts have not been passed on to the consumers as well, and that's why marketing margins have been high. But it was impacted the most as well because of LPG and no compensation coming in for LPG as well. We'll have state elections soon, and that is the time when oil marketing companies are the most volatile. So is it a short-term perspective in terms of investment, or is it long-term as well? Because even globally, refining capacities are coming in that could impact refining margins as well.
Rima, Sasoral, I'm sorry, your point is very well said, but to that, I have a little bit of a different view. I mean, if you just see the actions of the government over the last maybe 2 years or more, it's been very prudent, right? I mean, the only thing, they've done is that they had cut 2 rupees of, fuel prices in March of 24, and they've just increased 2 rupees of excise in April, which is basically only to, compensate the oil companies. So effectively, the government's focus is very clearly on energy security. And today, these companies, are very clearly on the forefront of providing energy security in the country. So I think there's a distinct change, the way the government is, perceiving this, particularly, of, the geopolitics in the world. So clearly, the LPG component re-emphasizes investor confidence in this space. And it clearly goes to show that the government is, interested in these financial metrics of these companies. So
Makes sense.
I really think that, the fuel price is more of noise because the companies earn well over normative margins.
Got it. Thank you so much for joining us today and giving us a sense of what's happening in the oil marketing company space. And of course, we'll have conversations about other sectors as well very soon. But the other big story for the day is Astral. Ria is joining us now. Tell us, how were the numbers this quarter, Ria?
Well, yes, this time a very weak set of numbers for Astral. The overall demand scenario in the polymer industry was quite weak, and which is why the revenue fell by around 1.6%. EBITDA and net profit also taking a hit of around 14% and 34%. Margins have also contracted by around 191 basis points this time around. Now, the company has said that during the quarter, because the PVC resin prices were so volatile, this volatility has resulted in inventory losses, and it has also affected realizations for the company. But they've also highlighted that PVC prices have now been settling down since the beginning of Q2 of FY26, and market conditions have also been seen improving since July.
So Ria, roughly Astral is a pipe manufacturer, right?
Yeah.
Where it would compare with the Phenolexes, Supremes of the world.
Yep.
So, tell us a little bit more about the company. Which segments does it operate in, and how did the segments perform, each of them? Was it one segment which was weak and that can recover? Tell us a little bit more.
Well, yes, so the plumbing business is the main segment for the company. The revenue this time around for the plumbing business fell by about almost 6% on a year-on-year basis. Margins also contracted by around 150 basis points, and volumes were flat for the plumbing business at about 56,000 metric tons. And the plumbing capacity has also been increased a little bit in this quarter. The other segment that they operate in is the paints and adhesives business. This is about 28% of the revenue of the company. Revenue actually went up by almost 10% for this segment, but margins again contracted by around 280 basis points.
Ria, the company has also announced an acquisition, right? Along with their numbers. You tell us more about that. It's a 120 crore acquisition.
Well, yeah, that's right. So they are going to acquire an 80% stake in a company called Nexalon Chem Private Limited. And the reason that they're acquiring this company is that they will be able to manufacture CPVC resin, which is a key raw material of the company. And this is going to help in cost optimization for the company, and also substantial margin improvement once the operations of this plant start in the second quarter of FY27.
Okay, all right. So that's about the acquisition. Let's wrap it up in terms of valuations. Where does it stand against its peers?
Well, in terms of the valuations for Astral, that currently trades well below its 3-year average PE. The peer Supreme Industries, that is actually slightly above its 3-year average. And smaller players like Finolex Industries and Apollo Pipes, they are near their respective 3-year average PEs. And Prince Pipes, another small player, that is also significantly lower than its 3-year average PE.
So Astral is the most expensive amongst all the pipe manufacturers.
That's right.
It's always been, it still is, though it's trading at a discount. And how did the peers perform in terms of financials?
The peer performance was also quite weak. If you look at Supreme Industries, which is the true peer for Astral, very weak set for them as well. Net profit and EBITDA fell by around 26% and 18% for this one. But they did report a volume growth of about 5.7%. And they are expecting a 10 to 12% volume growth in FY26 as well. Even the other players reported quite a weak set of numbers. But the important point to highlight here is that all of these companies, Astral, Supreme and Prince Pipes, the commentary is quite positive. They are expecting a demand recovery from Q2 onwards, and they're also they are saying that PVC resin prices have been seen bottoming out from July.
Yes, that's the major commentary. In fact, Supreme said it to us on CNBC-TV18 itself that they are expecting prices to bottom out from here on. Thank you, Ria, for making sense of what's happening with Astral and the market moves as well. For the markets, by the way, Nifty is down 40 points as we speak. We have the mid-caps, which are down around 86 points. Bank Nifty is the one which is underperforming and putting that pressure on the Nifty at the day's low across the board. So we'll keep tracking markets for you. But for now, we'll wrap on this edition of Trading Hour. Stay tuned. Halftime report is up next.
Nearing the lows of the day is the index, the perfect time to get in what the FNO data is currently suggesting. Sudarshan is joining in with an update from the FNO desk. Sudarshan.
So it's a fight between bulls and bears. While bulls are trying to take Nifty to yesterday's high of around 24,700, bears are doing everything to keep Nifty below 24,600. And currently, market is at day's low. And it's reflecting in two important parameters. First, India Volatility Index, it remains flat around 12 level that if you see currently. And second, PCR. So yesterday we saw from the short of from 0.66, we saw short covering. It went to as high as 1.07 and currently it's back below 1. Currently it's at 0.96. So what's happening on the option front? In the put side, if you see two active options are 24,600 and 24,500. And on the call side, 24,700 and 24,650. So it tells you that immediate resistance for Nifty is around 24,700 and immediate support would be 24,514. That is also 100-day moving average. If we manage to cross 24,700, the next resistance comes around 20-day moving average. That will be 24,850. Two stocks that I have taken. First one is Astral, that is seeing fresh shorts after a weak set of earnings that company has reported in Q1. And one is fresh longs that one stock is seeing, that is SJVN, after a healthy set of earnings for Q1.
Okay, all right. So those are some FNO trends that we are tracking. Thank you so much, Sudarshan, for joining in. It's time to take a short break. Up next, we'll discuss the market fundamentals with Sumit Rohra from Smartsun Capital. Welcome back. You're still tuned into Trading Hour. JM Financial is in focus after reporting their Q1 numbers. Net revenue surged 22.5%, but profit after tax more than doubled as compared to last year. Nishit Shah, who is the Group CFO at JM Financial, is joining us now to take a few questions. Mr. Shah, good morning. Thank you so much for joining in. Well, it's been a good set this time around, and this quarter, the profit was also supported by strong recoveries that we saw in the private market segment. That's where we've seen a 5 times jump in profits also on a YOY basis. Tell us what's the outlook on recovery in coming quarters. You had earlier indicated it will be around 300 crore rupees every year. Do you stick to that guidance?
Yeah, good morning. Thank you for having me on your show. So I'll just give you a background on the results. Apart from the recoveries, we've had a strong momentum in terms of net revenue growth as well. So it's up around 22%. Even the pre-provisioning profit is up 22% on a year-on-year basis. While there has been a recovery, there has been a strong performance all around, I would say. In terms of the recoveries, we've had a reversal of around 200 odd crores this quarter, which translates to a recovery of approximately 230 to 240 crores. So we are pretty much on target in terms of the recovery. As far as the next few years are concerned, the efforts are on. So we continue to stick with the guidance.
Can you just, for the benefit of our viewers, Nishit, can you tell us what the guidance is?
Yeah, so we had provided roughly around 900 crores over the last 2 years. And we've been stated that we'll recover one third, one third, one third in each of the 3 financial years, 26, 27, and 28. Some part of 26 is done with, and that is the reversal that has come through in the PNL.
Got that. So 900 crores of provisions will be recovered in the next 3 years. Also on private credit, what is the current book size? Because you had also given a guidance of achieving 10,000 crore in, I believe, by 2030, FY30. Tell us a little bit more about your private market syndicate book, because that seems to be clearly the growing market space for you.
Correct. So we are around roughly 6,000 odd crores. We had guided that we would hit 10,000 crores by in the next 3 years. We've seen very good momentum in terms of transactions, both on the syndication side as well as on the loan against share side. So that guidance is also pretty much on track.
Won't you beat the guidance if you're already at 6,000? 10,000 doesn't seem so far now.
Yeah, so there will be a mix of syndication. So as we say, as we have earlier guided, right, it's not focusing more on the loan book on the balance sheet. It's also having a syndication effort, which will really help us in terms of the ROEs, because you generate a lot of fee income on that. So that is kind of the business that we want to underwrite. So it's not necessarily loan book growth, but it's also a element of syndication which is involved here.
Nishit, firstly, thank you for joining in. The Amphi data that came out yesterday, it showed a lot of resilience. It was a multi-month high in terms of equity inflows. You've also gained market share for your asset management business at around 4.3% currently. Now, with the data that has come in, where do you see your asset management business being placed going forward? And is there an aspiration to take that market share from the current levels to past 4.5% and then maybe even go to 5%?
Yeah, that's a great question. So on the wealth and asset management side, we've had strong execution. If you really look at our strength of our relationship managers and sales employees, that has gone up by almost 45 odd percent. If you look at really the recurring AUMs, that has gone up to almost 31,000 crores, which is up 37%. And that is actually now constituting 27% of our overall AUM. In terms of our mutual fund business, we've hit almost 12,000 crores in terms of non-liquid AUM. That has increased by almost 80% in the last 1 year or so. You are right in terms of the market share. There has been an uptick, and obviously with the kind of execution and the expansion that is going on, we will strive to keep improving on the market share.
Okay. Nishit, your affordable loans segment, that saw some margin compression this time around. What's the outlook on margins here? What's the target with the affordable housing segment? How do you plan to grow it? And the guidance that you have here?
Yeah, so affordable housing, the guidance is pretty clear. We are roughly around 3,000 crore of assets under management right now. We want to take it to 5,000 crores in the next 2 years by FY27 and eventually hit 10,000 crores by FY30. That's broadly the guidance that we have.
Okay.
In terms of your question with respect to the margin, it's a one-off. It's largely on account of some of the assignment transactions that we have done, but it's more like a one-off.
So, Nishit, how much of your book is LAP? Because some participants are seeing some pressure that has come by. Your gross NPAs have also increased. Is that also a one-off? If you can explain that in greater detail.
Yeah, so that's also kind of one-off because we have a strong collections team as well, which is focusing on the recovery part. And to be honest, these are like less than 10 lakh ticket size loans really. So the recovery does happen, and that is the trend that we have seen in the past. So I wouldn't read too much into one-off spurt in the gross NPAs.
All right, Nishit, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of JM Financial, the stock though, is off the highs of the day. But we take a short break. More on the markets on the other side. Stay tuned.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. This is our special offering, Crypto Corner, and I have with me technical analyst, expert Umesh Sharma. Umesh, hi, thank you so much for joining us here at CNBC TV18. You've been following technical charts for a very long time, but many people ask, this is a question that has been asked for a very long time, on whether or not technical analysis works with cryptos, because they're very, very volatile. So does it really work?
Definitely it's work, because we trades on price.
Right.
So price are same. So we follow technical analysis like RSI, indicators, support and resistance. We can use in crypto as well. So it works very well.
And does it give you an indication on that the crypto prices or the Bitcoin prices are going to rise from here or fall from here? Does it give a quick indication on that?
Yes, there are some indicators because crypto has a different nature and it's a one-sided market. If you find the good rally on technical by the help of technical charts, so you can earn good money.
All right. What is it that, as a time frame, that you would advise crypto traders to get into? Should you hold for a medium term, a longer term, 1 to 3 years, how longer than that? What is it that you advise?
If you're using technical charts and if you are a trader, so if you're an intraday trader, so you can use 5 minutes or 10 minutes charts. And if you are short-term traders, so you can use daily chart. And if you are long-term trader, so you can use weekly charts.
But what is the time frame that one can earn maximum profits in?
As about me, I'm using 5 minutes charts, and it's giving good returns because it's very much aggressive. So that's the only reason. So I made good money in intraday.
What is it that you would advise within cryptocurrencies to invest in? Is it going to be blue chips, or do you think some other altcoins also give equal kind of returns and are equally credible as well?
As about crypto market, so there's two currency like Ethereum and BTC. It's like a blue chip because it provides you stability, loyalty, trustworthy with the high liquidations. So you can consider as a blue chip. And there's some coins like Solana and Avi, and there's so much coins. So that is a sector analysis. Basically, that is a you can say that medium terms, and that will consider in 3 to 6 months. And some is coins like short term, that is a news-based coin and momentum. But I will advise as a beginner, you can avoid this.
All right. Also, what would you advise to have cryptocurrencies for a beginner to be part of your portfolio? Should it be 2%, 5%, 10%? What would you say?
I will say that 5 to 10%.
Okay.
Yes, that is a part of your portfolio.
And that is for beginners or people who have been investing for a long time?
For everyone.
All right. Umesh, also, this is a 24/7 market. It is awake at all times. So people who have their positions in cryptocurrencies, suddenly they wake up in the morning and the whole market has changed. What would you advise them, and what is a better way of safeguarding yourself?
If you're a trader and you have a positions, so you try to stick on your stop loss because it's 24/7. So there is no gap up, no gap down. So you can consider as a stop loss in your trading, and that is the best chance. This is the best way to trade in crypto.
Umesh, a lot of people also tend to equate or in some sense look at equities vis-a-vis the cryptocurrencies as well. There are so many asset classes and cryptocurrencies are a very new kid on the block kind of a thing. How would you look at cryptocurrencies vis-a-vis, let's say, currencies or equities for that matter?
Crypto is young. It is in adoption phase. And there is a good chance to, invest in some new currencies. They will provide you high returns and high growth. But there is a correlation between equity and crypto because equity gives you stability, long-term returns, compounding and dividend. Crypto provides high liquidity, high volume, high growth and high potentials.
So when you look at the overall market, for the Indians as well, it is going to be about very high taxes also, a 30% tax, an additional 4% of cess in sense of education, and then you have 1% TDS as well. In spite and despite of that, do you see India continuing to grow when it comes to cryptocurrencies?
Yeah, it's a growing phase. And if you talk about India, so India has a $120 billion crypto holding. With the 30% of tax, 1% of TDS, without government support and without any regulations.
So it is legal, but it is not regulated,
Yes.
is how we have to look at crypto. How long have you been investing or looking at technical charts in cryptos?
I'm in this field since 2008, but in the stock market. But I'm using technical charts in crypto last 1 year.
Also, when it comes to investing, as you said, it can be a 5 to 10% of your portfolios as well. But the good thing about cryptocurrencies is that you can invest really less, 100 to 200 rupees as well in sense of tokenization.
Yes.
How would you look at that? And would you say that is the reason more and more people want to be part of this?
Because there's multiple coins. So you can invest in 100, you can start with 100 rupees as well. But there's some blue chip coins. There's some, low price
There
coin.
are 17,000 coins.
17,000 coins.
Yeah.
So that's the only reason you have lots of option in crypto. So you can invest with the low amount.
So, Umesh, even as India is perhaps one of the fastest growing markets, we've seen more business actually come to Singapore and Dubai, and US, of course, seems to be leading it all. How far behind would you say will India take to catch up to these markets?
If we talk about India, so India is the #2 country in the crypto adoptions. So with the regulations, without any government support, and if we talk about Indians, so that's the money from the retail trader, not for big investor. So I think India is leading.
Of course, absolutely, Umesh. Thank you so much for joining in today and making sense of all things cryptocurrencies. So, well, yes, as Umesh tells us, cryptocurrencies absolutely do follow technical charts. So, if you are one of those, you can absolutely look at charts and start trading in cryptos. 5 to 10% of your portfolio can go to cryptocurrencies, and you can invest as low as 100 rupees when you are buying your favorite coin there. Umesh, thank you so much for taking time out for us today. And with that, it's break time. More on the markets on the other side of this break.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Reema Tendulkar and Hormuz Fatakia. Well, when we started the day, it felt like, okay, we could continue some of the gains that we saw yesterday. The high today was 24,700, but now we are 120 points from the highs of the day as well. All the major indices in the red currently, and the PSU banks, which were supporting Nifty yesterday, they have come in for some profit booking. The bank Nifty is down 0.5%. We have the mid caps, which are struggling as well. Though Nifty PSU banking index saw some recovery from the lows as well. But Nifty Bank again at the day's low, mid-caps also not doing so well. So across the board, there is some pressure that has come by after yesterday's gain. Nifty Auto and Nifty IT, that is something which is supporting the Nifty from the lows. But Realty, banks, talk about PSU banks, of course, we spoke about it. All of them are putting a lot of pressure. And we do have a lot of specific stocks which are making major moves in the broader markets. And that's something we'll discuss in greater detail on the show as well.
Indeed. In fact, now the Nifty is closer to 24,550. So this sell-off from the highs of 24,700 is picking up pace. And, as Sonal pointed out, it's only auto and IT which is holding up in the green. So the top 4 Nifty gainers are in these segments. So Maruti, Hero MotoCorp, M&M and Tech Mahindra. These are the 4 stocks on the winners list. But let's tell you what we have for you on our show today. Well, in our special segment, the big story, we put the spotlight on 2 stocks. One is Praj Industries and the other one is Astral Limited. Both of them, the accidents of the day, post their Q1 numbers. We'll decode the Q1 earnings, the valuation picture, how it compares versus peers. At 11:15 a.m. is our special offering, Crypto Corner. Manisha Gupta will be joined by Umesh Sharma to talk all things crypto. At 11:25, we'll be joined by the management of JM Financial to discuss their Q1 earnings, the way forward. 11:30, we'll chat with Sumit Rora from Smart Sun Capital to discuss the market fundamentals and put the spotlight on oil marketing companies in particular. All in all, it's a power-packed trading hour, and now Hormus has moved over to the big wall to tell us all the buzzing stocks at 11 o'clock.
There's some very interesting names in this list today, and most of them predominantly earnings reactions. We'll start off with Apex Frozen Foods first up, and that is an earnings reaction. The stock is up 10%. Of course, all of these shrimp makers, shrimp exporters have been in the spotlight because of Donald Trump's tariffs and so on. They've seen some selling pressure. But today the stock is up 10% after its results. The results were good as well. The strong EBITDA growth, margin expansion as well. But before the result move, that the stock had gained only twice in the last 2 weeks, so showing that bit of selling pressure that has come in from the tariff related announcements. And despite this move, the stock has been a big value destroyer. The stock listed in 2017, and since then, every single year, the stock has given negative annual returns, barring last year, which was 2024. And even in this year, Y2D, the stock is down almost 10%. So Apex Frozen Foods, a value destroyer, but today trading with some bit of gains. The other one that I wanted to talk about in today's session is also an earnings reaction, and most of these names have traded with losses, but Sonata Software is an outperformer today, 10.5% higher. This stock has gained today after declining in 5 out of the last 6 trading sessions, so it's a strong move that the stock has seen. Almost 50 lakh shares have already changed hands today compared to a 20-day average of around 2.5 lakh. But again, despite this move today, the stock is down 40% year to date, which is likely to be the worst calendar year that the stock has had since 2011. Now the other one is VST Tillers. It came out with results yesterday, saw a big spike, ended 7% higher, is up another 7% today. The stock is up 15% as in the last 2 trading sessions. You already had 2 lakh shares that have traded in the first couple of hours compared to a 20-day average of just 8,000 shares. And lastly, Man Industries is the other one. This is an underperformer today. It's down around about 8% now. That's declined in 5 out of the last 6 sessions. Almost 13.5 lakh shares traded versus a 20-day average of 1.5 lakh. It has broken below the 50-day moving average with this 8% down move, but has been a good return, has delivered good returns in the last 5 out of the last 6 years. So earnings reactions predominantly, the tilt is for now towards the upside, but more towards the losing end are picking up pace as well.
Okay, all right. Thank you so much, Hormas, for joining us. That's an interesting list, big buzzers that we are talking about. In fact, this is our time to go across to our special segment. This is the big story where we highlight key stocks, themes, and deep dive into their financial and historical performances. We've been talking about a lot of stocks. Today, we will now be talking about a lot of the stocks. In fact, now I'll be going across and tossing to Vamakshi, joining in on Praj Industries. Vamakshi, let's first up start with how do the numbers look this time around?
Well, Sonal, a weak set coming in from Praj Industries. The revenues dipped by almost 8% on a year-on-year basis. The execution was quite weak. The EBITDA margins contracted by around 825 basis points, resulting in a nearly 66% fall in the EBITDA. And the net profit too saw a very sharp cut of almost 94%. And the net profit now is only at 5 crores. Now, keep in mind that in the first quarter of last year, there was an exceptional gain of around 28 crores on, profit of sale of land. But keeping that aside as well, it's a very sharp fall as far as profitability is concerned. Apart from that, let's also take a look at, how the different segments performed this time around. The bioenergy, which accounts for nearly 60% of the company's revenue, saw a sharp knock of almost 24% this time around. On the flip side, what did well was engineering, up 29%, and high purity, which was up 41%. Largely, the impact on performance came in from the domestic ethanol business. There was a delay in execution cycles here. There was liquidity crunch from the customer's end as well. The Genex business as well continued to incur expenses. However, there were no corresponding revenues that were incurred this time around. And apart from that, there was also delayed execution in a couple of high-value engineering orders, which led to high labor as well as infra costs. The ordering activity too, this time around, was lower by almost 11%, and quarter-on-quarter as well. It was down at only 795 crores. So weak set coming in from Praj Industries this time around.
And Vamakshi, clearly their core business, the biofuel, which you said is a majority of their revenues, was the only segment which was under pressure. So Q1 was weak. I mean, is this like a blip? I mean, was this the only weak quarter for them? I mean, just give us a sense of the historical picture in terms of financials.
So when we look at the trends, Reema, largely we've seen that the company has been posting weak numbers, quarter after quarter. Look at let's first look at how the company has done on the last 5 years. So revenue has grown at a CAGR of almost 24%. The net profit is up 23%, and the stock performance has also been quite phenomenal. But FY25 was particularly, a blip for the company. Revenues declined, the margins came under pressure, and the net profit also saw a very sharp cut. In fact, in the last couple of quarters, when you look at the revenue, in the last 5 quarters, we've seen actually 4 quarters of revenue degrowth coming in for the company. The margins also used to be in double digits, but now they're back into the single digits, and this time around at 4.9%, it's the lowest margins that we've seen in the last couple of quarters. Apart from that, the profitability has also declined consistently for the last 4 quarters. So, if you look at the trends as well, over the last couple of quarters, the company has not done very well.
Not delivering on the numbers front, Kamakshi. It must be showing up on the price as well, right? Because the stock has halved from its peak. Incidentally, the peak also happened on the 1st of January. Since then, the stock has halved. So what, in terms of the valuation picture, does Praj now throw up compared to what it was at its peak?
Well, Hormaz, in FY25, the PE ratio was at 55 times. This is the peak PE ratio that I'm talking about. Since then, the current PE ratio has now fallen to 35 times, which is a fall of almost 57%. So therefore, the valuations have corrected quite a fair bit for Praj Industries. But, in terms of what could be the next valuation re-rating triggers, number one would be the contribution from GenX. Keep in mind that in the previous con call, the management had highlighted that meaningful revenue from this particular, GenX could start coming in from the second half of FY26. Apart from that, a better operating environment. Keep in mind that the macro environment for Praj Industries has led to the kind of declines that we've seen, over the last couple of quarters. So if this improves, probably the earnings might also improve. And the third and most important is improvement in margins. Now, the first target for the management is bringing it into the double digits, is what they've been highlighting over the past couple of quarters as well. So let's see whether or not that happens, and that could be a big re-rating trigger for Praj. A con call is scheduled at 12 p.m. So we'll be watching out for the commentary that comes through the management as well.
Oh, yes, absolutely. We'll do that. Thank you so much, Kamakshi, for detailing those numbers for us and telling us what the future outlook is, and especially when it comes to valuations as well. That's our big story, but we'll slip into a short break. When we come back, we'll put focus on the crypto market with Manisha Gupta on the other side.